software for any task. Specializing in real estate, long-term care, life insurance and annuities, social securities, government benefits, and senior housing. Luhu Advisors. Let us help you.
This program is furnished by amp2tv.square.
The content, information, and opinions expressed during the related show are those of the show personalities and guest alone, and not those of Vic Canellis Media Group, its parent, affiliates, or stations. VCMG Live is not responsible for any content, information, or opinions expressed. User bears full responsibility for their reliance on such content, information, or opinions.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995. Studio A.
Hi and welcome. Today is Monday, 6 o'clock, Making Money with Laura Sanders, a name you can trust. Thank you for joining us. Today we have a special guest. I personally think he's a little young and he's doing amazing at what he does. His name is Max Fish. He's with Nationwide Mortgage. Welcome, Max.
Thank you so much, Laura. Thank you so much for having me. I really appreciate it.
Thank you for coming out today.
I really appreciate the opportunity. I think obviously, I think I'm a little older than I'd like to think, but I really appreciate you coming out and bringing me with you today.
Yeah. So you do mortgages. I've been doing this for over 20 years as a realtor, and what I've noticed is that a lot of people are getting mortgages and they don't know where to start with the process, and you're a mortgage broker.
Yes, ma'am.
I had a mortgage license when I was younger, a long time ago, back before a lot of rules and regulations had changed. And I do a lot of business, and we've done business together,
Sure.
but I've done business with direct lenders as well. So can you tell us what is the difference between a mortgage broker and a mortgage lender, or a direct lender?
Sure. So I think that's a super important question, and I think that the term mortgage broker gets thrown around a lot in our industry, mm-hmm. right? And you are absolutely correct. I am a true mortgage broker, which means I work on the wholesale side of the industry. And, the direct lender is the retail side. So I like to compare it to, a Publix or a Costco. The simple difference is that the broker world is just a little cheaper, right? We're getting rates at wholesale. And the technical biggest difference is that we don't lend our own money. So we are not a bank. Nationwide Mortgage is strictly the middleman between the client and the various accounts that we work with. For the client, the product, in my opinion, is a little bit better because, number one, again, we're cheaper. Mm-hmm. And number two, we have the ability to shop around the rate, right? So I work with, 5 to 10 consistent accounts that I can go to and kind of say, okay, well, here's the client's situation, credit score, loan amount, income, and kind of say what's the best that they can do at the given time for the client, whether they need speed. If that's important, mm-hmm. then I go to an account that needs the speed. If it's just the lowest fees, then I find that for the client. So for me, I feel like that I can better serve the client, with what their need is at the time, if that makes sense.
So what I know to be true before,
sure,
but things change. Every single day things change. So what you think, like when somebody says, well, I bought a house 10 years ago. Well, things have changed. Today now they need to know if you're going to be willing to give up your first child to them. Like, it's like people get
sure.
so upset because they have to give so much paperwork. And
yeah.
I say, listen, you're not special. They do this to everybody. But the misconception that I'm thinking now, and you tell me, correct
sure.
me if I'm wrong.
Absolutely.
do you pull somebody's credit 10 times? Because I know a direct lender doesn't do that. And you hear that,
Sure.
oh, my credit's getting pulled, it's getting pulled, it's getting pulled, and it's bringing my credit score down. So a lot of people are concerned when they go to a mortgage broker versus a direct lender who is lending
Sure.
that company's own money,
Yeah.
right? They're concerned about that. Should they be concerned about that?
Well, I think that the short answer is no.
Okay.
But the nature of the question is super important to address, because I think that mortgage brokers, the term broker has gotten there's
Bad
like
rap.
a negative connotation since 2008, which it's changed, like you said, tremendously.
And that's probably when my second child was getting ready to be born, and they changed
Sure.
the laws, and it was like all this extra work, and I was like, I'm not even using this. Why? So I let it go.
Sure.
But listen, I was in an office with 4 guys that were all trying to get their license.
Yeah.
They failed multiple times. I was the only one that passed the first time. And again, I was so sad to let it go, but then I was having a new baby being born. I was like, I can't do that.
Yeah, absolutely. I mean, the bottom line now is, I think the industry has been dominated by the multi-billion-dollar companies that you see out there in the retail space.
And they are making a ton of money.
And they are
the main owners of the company.
Exactly. And the problem, I guess, when it comes to, again, the nature of the question, is that there's just a lot of misinformation that's being passed around about what brokers actually do and what the wholesale world looks like. And so, no, we don't pull credit any more than a retail bank would. And
that's something separate, which I
Sure.
think people don't understand. Let's talk about the difference. We have mortgage brokers. We have mortgage bankers, right? You go
Yes,
to
ma'am.
Bank of America, AmTrust, all these different banks, City Mortgage,
Yeah.
right? And then you have your direct lender. And so I think people get a little confused.
Sure.
Like, where do I go? And obviously they trust us, the realtors.
Yeah.
So we want to help people to make informed decisions on where should they go, what should they do.
Yeah, I mean, of course. So I tend to, so the two groups that you just named, the mortgage bankers and the direct lenders, they're all retail. So they're under the same umbrella. The only difference is the direct lenders, they work for companies that strictly only do mortgage. Right? They don't have checkings accounts, savings accounts,
Right.
investment. They only do mortgage.
And let's clarify that when people say, I'm going to go to the bank because they have all my banking stuff.
Correct.
They still ask for your bank account. They can't just go to the bank and go, give me your information. You're still going to have to send them just like you would do to a direct lender and a
Yes.
mortgage broker.
Yes.
So that's a misconception that I believe people have, is that they think, okay, my money's with Bank of America. I'm just going to call Bank of America and it's going to make it easy. No, they still have to send, they still have to pull their credit report. They still have to pull their accounts.
Absolutely.
And it's not like they can just go to their accounts and pull them. You've got to send them account 5474, like is the last four,
Exactly. So, and just to piggyback off of that, so when you're talking about the direct lender world, you go in as a consumer, and you say, here's my information. They check your credit, they check your income, they check your down payment, and they kind of, I like to create the illustration of, they kind of look in their matrix where you land.
And they haven't really pre-approved you.
And they say, this is where you are, this is what we can offer you.
Yeah.
Where for me, I have 6 matrices, if that makes sense.
It does make sense. So for instance, let's give people an example.
Sure.
I would say a good example would be FHA loans. Some lenders can't lend on FHA loans under 6.
Sure.
Some can at 540 credit score. Under 6 credit score is what we're talking about.
Yes.
So let me make that clear. Some lenders can do a 540. Can you do a 540?
Yes, absolutely.
Okay, not everybody can do a 540.
I can go down to 500.
540 credit score.
500. I can go down to 500.
Which is, honestly, people, if you have a 500.
But here's the thing. Here's the thing.
You could buy a house. I'm like, you can't get approved by the association. So.
But here's the thing. That's an important note to make, because
That's a matrix, though.
well, exactly.
It's a
because
box
if I
fitting in the
worked, if
box.
I worked for a company that said,
Yeah.
we only have, we only go down to 580, then I have to do whatever that company with somebody that might be located in a completely different state, that doesn't understand our market, that doesn't understand our consumers. I, in South Florida, have to do what the company-wide is doing.
That's another good topic to kind of go off
Sure,
of.
to transition, yeah.
To transition to another topic is doing what companies allow you to do, and understanding state to state. So give you an example. New York, co-ops, they're everywhere.
Yeah.
Everything's a co-op, right? Like you walk down the street,
Yes.
that's a co-op. Now you come here to Florida, and a co-op looks like a condo, right?
Yeah.
Just because it has stripes doesn't mean it's a zebra. But we
Absolutely.
see it has stripes, and we're like, is that a zebra or is that a giraffe? Like, we're asking ourselves, right? And I
Sure.
know it sounds funny to say that, but we have different things. We have townhomes up and down that look like townhomes, but they're really condos.
Yeah.
So it's tricky. So that's why when you are hiring an agent or when you're hiring a lender, they have to understand what's going on here, because first thing is that if you were in New York and you were getting a loan on a co-op, it would be easy breezy.
Sure.
You come here, there's only a couple of people that can lend on co-ops. Can you do co-ops?
I can, but
It's very rare, and that's
it's
actually
very-
you're using a what do you call it, program? Can't even think of the word.
it's solely for investors. It's a DSCR investor program.
You can do that with a co-op.
Yes.
Okay, but let's make note that if we're using that loan
Mm-hmm.
and it's a co-op, it's going to have to be for investment. You have to already own a primary.
Correct.
So see, these are the little things that
There's
you're
like
like,
little
God,
nuances.
you're talking about so much stuff, and
Sure.
that's why you want to hire people like us.
Absolutely.
I mean, I like to. That's what the whole thing is. We're here for, is because in the end, it's to make money, right? How do you make money? Well, I'm saving you from spending money on an inspection and appraisal before going to a property that isn't going to make sense.
yeah, you have to align yourself with a
Right.
good team.
Right. So
know?
another example is budgets. So when I list a property, I say to the owner, they say, well, how much is my place worth? I say, well, to tell you how much it's worth, I said, let me see your budget. Because when I see their budget, then that tells me that there's a bigger audience that can buy that property, right?
Sure.
So if they don't have 10% in reserves, if it's a primary residence, we're probably subjected to 20 or 25%.
25%.
25% for
yes.
condos. If it has 10%, we could probably do 3% depending upon the buyer's credit score.
Correct.
And if they're
There's
a
a
buyer
lot of different
that,
caveats.
right.
And,
So,
yeah.
but we could say you could advertise it, buy this for 3 to 5%
Sure.
down.
Sure. Well, I mean, you make a good point, because the advertisement of those things are there, but you want to make sure, you know, as somebody that's a prospective home buyer, you want to make sure that you're aligning yourself with somebody that's going to be transparent with you, honest with you, and talk through your realistic options. Even though the 3% down payment is available, you want to make sure, obviously, that you check all those boxes to be able to do that, because, you know, you don't want to lose your time and potentially a lot of money, you know, inside of a transaction if you don't actually approve. So it's very important to align yourself
And
with a
that's
good
why
team.
that's all done prior to even going out looking, and then we know what we're looking for.
Absolutely.
But as far as to advertise and figure it out. So then the next thing we're talking, there's so much. Like,
I know.
Listen, I could talk about this all night, and
I know.
I'd probably put half the table to sleep. But, you know, listen, this is what I enjoy. And since I can't say any bad words, I mean, what fun is that, right? So we're going to talk about real estate. So there is a bad 4-letter word. Do you know what it is?
I can think of a few.
FSBO.
Oh,
Sorry, I had to
geez.
say
There
it.
you go. You had to throw that out
Yeah,
there.
it's a bad F word, you know. Anyway, 4-letter F word.
For sale by owner.
For sale by owner, yep. So going back, so let's go back to the condos. So if you're buying a condo, right, then we have the option for 10% down with a second to piggyback. People think that the second's out since 2007, 8, 9.
Yeah.
Remember the pick-a-pays.
And when she says second, guys, she means HELOCs, home equity lines of credit.
Right, so those fluctuate with whatever the market's doing.
Yeah, they're tied to prime, which is
Okay.
what the Fed has been raising for the majority of the year due to
Right.
inflation.
That's why it's good to buy CDs now.
Exactly. So what you're referencing to, just so I can clear it up with anybody listening, is when you buy condominiums in the state of Florida, and it varies by state, which you know makes it super important that you're working with a stateside lender that understands the laws of Florida, right? But when you're buying a condo in the state of Florida, conventional loans force you to look at the budget of the homeowners association. if they don't have 10% of their annual budget in their reserve, so quote unquote savings account, right, then conventional loans require you for a primary residence to put 25% down. The way around that is you can put 10% down of your own money and then use 15% of borrowed money by way of a HELOC, home equity line of credit. And so in the bank's eyes, they will consider you putting 25% down on that condominium, which has helped a ton of people, especially, you know, with the headache of trying to get the budgets from some HOAs. I mean, you know as well as I do, it's super hard to get in contact with them and get certain financial documents. So again, that is something that we vet thoroughly up front, to where somebody like Laura will send me a budget, and within 2 minutes I can tell you what kind of down payment requirement we're looking at for that homeowner association, and then build a game plan from there.
So some of the big companies like
Cross country, yeah.
Thank you.
Yeah.
Cross country. So Nationwide Mortgage, did you buy a franchise from a company? Like there's a
Sure.
base company?
So that's a really good question. So Nationwide Mortgage is the company that I started to work with when I first got my license. And we're a privately owned mortgage brokerage with a location in Jacksonville and in Coral Springs. And we don't really compete that much with the bigger companies like that. Again, multi-billion dollars, marketing,
Maybe
Super
in
Bowl
the future.
commercials.
You're
Maybe in
young.
the future. But
Yeah.
I kind of take a stance.
But you have to charge more money
Well,
because that person at the top has to get paid.
we don't. No, it's actually less money. We charge less money.
No. I'm saying if you were to become that big
Sure.
company.
Then it becomes, in my opinion, disingenuous. And now you have a ladder of
people to pay.
that need to at the top, that need to get
Right.
paid, and corporate structure, and so, not to get into too personal, because I'm sure there's we'll have a segment for that. But I started with the company, and we were kind of more personable, right? We don't the way that we run our business, and now I'm a third partner of the company as well, but we don't run our business based off of our name. We run our business based off of our personal names.
Okay.
Right? And you
Yeah,
are
I honestly, I knew your name. We've done
I was just
business
about to say
together,
that. Most people
and then
that
I
I
was
work
like,
with-
I gotta go look. I don't want to make a mistake.
Correct.
Yeah.
Most people that so for me, it was just, hey, do I want to sell cross country, a guaranteed rate, or these companies, or do I want people to kind of just say, hey, I work with Max, right? Instead of working with a big corporate company, being passed down the assembly line, getting down in the rabbit hole that you can get working with some of the direct lenders.
And so, is this your first profession career, or did you do something before this?
Yeah, so that's a good question. So before this, I was a math teacher and a football coach for high school.
Oh, what high school?
Westminster Academy in Fort Lauderdale.
Oh, we'll have to talk. My husband went there,
Oh, did he really?
and he was a football coach.
Oh, that's so funny.
So that's funny that we didn't even know
Yeah,
that.
we didn't know
That's
that
so
connection.
funny.
Yeah, so I was a football coach and a math teacher there, and prior to that, I was a basketball and football coach and a math teacher at another school. So that's what I did. I was a teacher before I got into this.
Okay. So I know your parents are realtors.
Yes, they are realtors, not career-long realtors.
Okay.
They owned an interior landscaping business, and later on got their real estate license.
And is that what brought you into this field?
No, so there was a couple of things that brought me into the field.
One is making no money.
I
know, because I'm a therapist. I have a master's degree.
You said it, not me. But there was a couple of things. Well, one, because I attribute it to, I was heavily into sports growing up, so football and basketball.
I couldn't tell.
So the people listening have no idea what you're talking
Yeah.
about.
But the people that are watching see his guns. I mean, he has them all out.
So football and basketball, I grew up playing, and so there's a competitiveness there. And you know,
Okay.
in sales, there's a level of competitiveness.
Is there competitiveness in choir? Because I was in choir, and I'm pretty competitive. But
Well, I guess there could be.
getting
but
the highest note, that's it.
but then there was a level of, so being a math teacher, it kind of molded, because I didn't want to be a teacher. I kind of fell into it, and it kind of let me know that I have a knack for problem solving just in general. Not like, hey, the two, carry the two, and and here's where the 4 goes, but more so
I don't know. You had new math. I had old math.
but just more so just like applicable problem solving.
Yeah.
You know, and I just kind of wanted to throw those things together, and that coupled with having a super supportive brand new wife when I made the transition helped a lot too, you know, going from W-2 to commission. So, so kind of, I wanted to be a nerd. I wanted to find a job where I could be a nerd and do math, but also do things like this and be personable. And I was researching one day, and I wish I had a cooler story. I was like, hey, I think I can kind of mix my 2 strengths here, and jump into mortgages, and that's exactly what I did.
But it's a really, you know, everybody wants to be a realtor. Everybody wants to be a mortgage broker, lender, whatever. They want to make money. Commission-based jobs are really good, but there's a lot of suffering, and you've really gotten in with some good places, and you're doing really well. You know, which is really hard to do, especially like, you know, listen, you're not old, you know, you're still a millennial. And typically, you know, they say, and I'm not putting down millennials because they work for me, but, you know, usually they're like, oh, I have to be there before 11. Like, I don't know. I mean, by the time 11 o'clock comes, I'm like, God, is it time for a nap yet? Like, I feel like I've run a marathon. So,
well, all my friends and family, they know that I'm kind of like an older soul.
Okay,
right.
That's cool.
And so, you know, I kind of just have always carried myself that way. But, you know, in addition to that, I saw that there was a gap early on. I was, you know, I think mortgages is an older industry, right? A lot of people, a lot of the big players in the area have been doing it for 20, 25 years. They have their relationships. It seemed kind of stagnant to me. And I saw early on that I think people sometimes make a lot of mistakes, right, when they first start in real estate or in mortgages.
And they don't listen.
Correct. And I think one of the biggest mistakes that people can make is that they focus too much on trying to get good at the things that they're weak at, rather than delegating those, pushing those aside, and focusing on the things that they're already good at.
Right.
And so that's exactly what I did.
So let me ask you a question, just because I think that what I do and what you do, we're both in sales. So just because I was having this conversation today with one of the girls, right? And just out of curiosity, it's nothing specific to you, but in general, how long did it take you, be honest, to get your first loan closed?
I closed my first loan in 3 months.
So it took you 3 months?
It took me 3 months. And since then, which was 2.5 years ago, I have now originated over 200 million in loan volume.
Okay, that's awesome. But I'm only asking because I know that sometimes we tell people, listen, you should have seven months to a year of money put aside in order to, you know, get things going. So, so I'm going to ask you one more question because we're running out of time, and I want to make sure people.
Forever.
I know. So one more question. One thing is, I was like, any funny stories that have happened to you, like walked in on naked people? So I don't know anything. Something good.
So I think this is a super funny story, and it relates to mortgages. So I mean, it's not like you're not going to roll on the floor. But I had a client one time that this was about 7 or 8 months ago that the underwriter swore that she had a house, that she owned a house, and that she wasn't disclosing it. And it created a big problem because she was saying that she didn't own any other houses. And the underwriter was like, look, here's proof. Here's her name. Here's a house that she owns in Miami. We even verified that it was it was her birthday.
A sister. Yeah, it was her sister's house, you said.
Well, we didn't know that at first.
Right.
And so then she called me one day and she's like, Max, this was after a week of fighting with the underwriter. She was like, Max, I forgot to tell you, I have a twin sister that obviously has the same birthday as me, but our parents also gave us the same exact name.
Did you ask her, like, what were they thinking? So anyway, so crazy people. Max, tell us a good place for people to get in touch with you if they're looking to get a loan.
Sure. They can call my number at 954-729-6933, and I will be the only person that answers that phone. You can call or text me anytime. And
well,
that's
ladies, not anytime. His wife might be concerned. I don't know.
That's probably the easiest way to get a hold of me.
Okay. And I'm Laura Sanders with Making Money. You can reach me at 954-650-0827 or my website at Laura Sell, couldn't afford the S, laurasell.com. And I'd love to answer any questions that you have, and look forward to seeing you guys next week. Happy Thanksgiving.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.
On the preceding